Small-sized companies had a good year. As of the beginning of December, the Russell 2000 Small Cap Index was up 9%, but that compares with the S&P 500, which is up nearly 11%. Large caps have outpaced small caps for most of the year, which could be a warning sign, since small caps tend to lead large caps. So what's the outlook for small cap stocks next year? What are they telling us about the investing environment now? And which small cap stocks offer the best opportunities for next year? Joining me now is Nina Baranchuk, Chief Investment Officer for Sandy Spring Bank and Trust, and Craig Hodges, Co-Portfolio Manager of Hodges Small Cap Fund, a 5-star rated fund by Morningstar. Welcome to you both.
Thank you much.
Thank you.
As I mentioned in my intro, large caps have outperformed small caps so far this year. Nina, what is that telling you about the broader market and the investing environment now?
Well, I think it's reflective of the fact that although we have had an economic recovery off the bottom of the market in 2009, it's been somewhat anemic and slow, and growth rates have been well below those we would normally see 2 to 3 years into an economic cycle. The small caps, being the companies that tend to be the most sensitive to what's going on in the overall economy, are showing you that by their relative underperformance off the market bottoms.
Craig, what's your outlook for the Russell 2000 next year?
As far as the caps, I do believe that the large caps are undervalued on a relative basis. Small caps have done well for a very long period of time. And when you have investor confidence where it is, which is at a very, very low level, they tend to gravitate to larger, more safer companies. I think the actual lack of confidence tells me or points me to small caps being the most undervalued in that I think that's where they've been getting sold for a longer period of time. People have kind of sold into the small caps and gone with the safer stocks. But as the economy starts to improve, and as you start getting more of a stable environment as far as political and a lot of those situations, I think we're going to see small caps do well. And I think next year will be a good year in the market.
Nina, do you think that small caps will outperform large caps next year?
I absolutely agree. I think they're well positioned, like their larger brethren. Balance sheets tend to be very clean. A lot of the companies have done what they've needed to do to stay lean and mean while top line growth just hasn't been there for them. A lot of them have made inroads over the last 10 years into the international marketplaces. And so to the extent that China, now that it's gone through its political 10-year cycle and its new leaders are in place, the fact that we're another year down the road with the European debacle and hopefully closer to some solutions, I think those will provide tailwinds. And I think the small caps are absolutely poised to participate.
Craig, what's your take on that? Because for the most part in the past, small caps have been the one that derive most of their sales domestically. Nina seems to think that now they're deriving more of their sales globally. How does that bode for small caps, especially as you have seen global growth slow so far, at least this year?
Yeah, I tend to agree with that statement. Small caps are branching out, where we're falling to a lot of our domestic small cap stocks that we own have an international presence. But that's actually what we like about the small caps, is that you can find a lot of companies that have most of their business domestically, which that's been actually a good thing here recently, not to be exposed to some of the weaker European markets and such. If you look at what's happened in the first quarter earnings, companies that have been tied to Europe have really underperformed and have really had some pretty choppy results. And so we've kind of tried to stay more domestic in our stock picking. But at the same time, you are able to find some small caps with some nice worldwide exposure. So, it's kind of, I guess it's the beauty's in the eye of the beholder. We see a lot of things domestically here that we like.
Nina, did you want to weigh in?
Absolutely. I was just going to mention a stock that we're looking at. It's an old U.S. stock founded in the 1800s called Watts Water Technologies. The ticker is WTS. It's a case where the company has remained over its history very focused on technologies to support the movement and control of water. as infrastructure build continues around the emerging markets, it was a natural opportunity for a small company like this that had a broad line of everything from valves and stop gaps and special piping and sort of green biology, wastewater treatment kind of systemology, for it to be tapped. And they've been big in Europe, they've been big in China. We've been watching them do a great job as those economies have slowed in pulling things back, in tempering things. At the same time, they've been making acquisitions, and we think when the general economy picks up again, these kinds of parts and services that are needed for plumbing and heating and water control around the world are going to be very profitable for Watts Water.
Craig, what are some of your favorite names for next year, small cap stocks?
Yeah, what we do with the Hodges funds, and especially in the Hodges Small Cap Fund, we're looking for companies that have very high barriers of entry. Companies that have limited competition tend to do much, much better than industries that are oversaturated. And we've kind of identified a lot of industries that we're focusing on that have those characteristics. You know, the rails have been one, some of the steel makers, the deep water drillers, they have an advantage of limited competition. We like the housing stocks. Now, not necessarily the ones that are building houses, but some of the other plays like, you know, Briggs and Stratton, which makes lawn mowers, and they make generators and engines and that sort of thing. You're seeing a housing will really help a stock like that that's kind of been an underperformer. Plus the most recent storm we've had is going to lead to a lot of generator sales. Companies like Encore Wire in the copper wire business. The company has done very well during a very tough economic time. And Encore Wire is poised to do extremely well once building starts back up in the housing area. And in the energy area, I mentioned the offshore drillers are one of our larger holdings, a company called Atwood Oceanics, which trades less than 10 times earnings, and we should have a deep water rig shortage starting next year through 2015, and they're going to take real advantage of that.
Thanks so much to both of you for being with us. So appreciate it and hope to see you soon.